How can we confirm if the market is going to change the direction? If the market is going to reverse from the downside to the uptrend, how can we know that the market is going to reverse from the upside to the downtrend? That's why we get confused with the trend, and they are saying the trend is your friend. That's why today's video we are going to explain to you how can we get all information that the trend is going to change the direction, and how can we get the confirmation to enter that trend by expecting the market to change the direction? Where are we going to set the target? Where can we exit from? Where are we going to be getting the entries? Confirmation. That sounds amazing, guys. Remember to subscribe on the channel, like the video, and we'll be back in the minutes on our today's video. Okay, welcome back. First, what is a reversal? A reversal is the term used to describe or explain when the trend reverses or when the trend changes the direction. For example, from the uptrend to the downtrend, even from the downtrend to the uptrend. That is when the market moves in the uptrend, and at that moment, the market will change the direction from the uptrend to the downtrend, and even the market can move from the downtrend by changing the direction to the uptrend. Okay, so there is a confusion between a reversal and a pullback. We talked about that in our previous videos. Okay, a pullback is a retracement. Remember, we are in the trend. As the trend is moving up, making higher highs and higher lows, as we are making a higher low, as we are moving in the uptrend, making higher highs and higher lows, as we are creating these higher lows, this is a pullback. When we are moving down, making a lower low and lower high, these are pullbacks. Lower high, this lower high is a pullback. So a pullback, we can find it in the trend continuation and is a temporary pause of the market. Where can reversals happen? From the support levels and resistance levels, from the highs and from the lows. The high is resistance and the low is the support. That's where we change the direction from. We are going to talk about that in a moment on our examples. Okay, so we are going to start with the rules. So what do we look at when we are going to expect the market to change the direction? How can we know that the market is going to reverse? Okay, first what I look at is zones or support and resistance areas. Okay, so the second thing I will be looking at is the formation of the chart pattern, and the third one will be the formation of a trend, and even the last one will be the confirmation of the candlestick chart pattern where I'm going to be entering from. Let's say that the market is in the trend. We are from this area by making high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Okay, to the high, which will be a equal high, lower low, lower high, lower low, lower high. So this is what happened here. As we are approaching where the buyers started from by moving in the up direction of uptrend direction, that is an area which is likely where we can reject from to change the direction to the upside. As we are approaching that area, remember the history repeats itself. We have to look on the left hand side and see if we can get that rejection or where the market start moving up. Okay, we started moving up from this area. So when we are approaching this area, we are expecting the market to change the direction. Okay, not only that, okay, we are expecting the market to reject from the area where we rejected from before, or where we reversed from where the buyer started to move the market up. Okay, so this area, after getting that area, I got the candlestick that will show me that we are rejecting from there. So when we reject from there, we are going to be looking at on the second rule, which is a what? the formation of the chart pattern. So now, as the market is moving down, we end up by forming a what? By forming a double bottom. Okay, if you don't know about the chart patterns, you will have to go in our previous videos and watch everything about the chart patterns. As long as we are forming the chart patterns, we are going to be waiting the formation of the what? Of a trend. So this chart pattern is a reversal chart pattern, which is a double bottom. As we are creating a double bottom, we are going to be ending up by creating this neckline. Okay, when we are creating a neckline, which means that the market is making higher high, by breaking above this neckline is a higher high. Means that as you are creating a higher highs, and this way is the formation of the uptrend, because when we are moving in the uptrend means that we are making higher highs and higher lows. So this is the higher high after breaking the previous high, which is a neckline, also which is a resistance, where we are waiting for the higher low to create a support. This support from the higher low, that's where we are going to be buying from. Okay, so we have the first signal from the rejection from this stronger area, which is what? Which is a demand zone or a support. So as we are rejecting from this area, we are waiting for the formation of the chart patterns. So now we have a double bottoms. So after double bottom, we are waiting the market to break above the neckline. By breaking above the neckline, which means we are creating a higher high after breaking the previous high. So as you are creating a higher high, you need to wait for the higher low to go for the what? For the higher high. So when we create this support from this area, that's where we are going to be buying from, as we are expecting to go for the higher high as the uptrend. Okay, so after getting a higher low, and that moment I'll be waiting for the formation of the candlesticks. Remember the reversal candlestick patterns. Okay, bullish engulfing, bullish harami. So I will be looking at that. As I'm moving up, I will be making a higher highs and higher low, means that I'm in the uptrend. Okay, so how can we expect also from the uptrend to the downtrend? Means the history repeat itself in the market. I have to look in the left hand side and see if I have an area which is interested where we can be rejecting from, where we can reverse from. This area is strong enough to give us a signal by changing the direction to the downside. Okay, because this area is where we reversed from before, and that can be repeated here, but we have to follow the rules. Okay, what I'm gonna be looking at from this area, I will be looking also again by the rejection. When we get a rejection, which means that we are forming bearish candlesticks, by the forming of bearish candlesticks, the second thing I will be looking at is the formation of the chart pattern. Let's see, maybe we are creating a triple top from this area by rejecting the strong area. I'm rejecting from this area. I will be looking for the chart pattern. After forming a triple top, I will be looking how the market is going to be starting forming lower low and lower highs, because we are expecting the market to go in the downtrend. Okay, as I'm breaking below the previous low, which low? This is a neckline. As we are breaking below a neckline, we are making a lower low. So we are waiting for a lower high from our previous low, which is a what? Which is a neckline, also a support, where is going to turn into resistance, where we are going to be selling from. Okay, so lower low to the lower high, to the lower low, to the lower high, to the lower low, until we continue in the downtrend. Okay, so now this is what I was talking about. This area we rejected from is a strong zone, and the formation of the chart patterns, which is a triple top. After forming a triple top, we have this creation of resistance from the lower high, where we took a sell from. So we are going to look also examples in the minutes from the chart. Okay, so which means the areas which are likely to be the market reversing from, those are areas which are interested to be looking at on the change of the trend direction. Okay, let's take an example from pound Japanese yen. Okay, the market rejecting from this zone. So we are now trying to reject to change the direction to the upside. Before, the market was moving down, was a stronger downtrend. Okay, so we have the low. This is the low where the market rejected from here multiple times. Okay, and we are still rejected from there. So we are waiting for a stronger confirmation of what? Of a chart pattern. After the chart pattern, we need the formation of a new trend. Okay, so the areas when we get that confirmation, we'll be looking at these targets. Okay, because this is our last selling volume of the market, so which will be our target. Okay, so now we are in consolidation. That's when the market is also forming a chart pattern. Okay, we formed a chart pattern here before, and we are in this area where we have some kind of inverse head and shoulder, but which is not well visible. We are waiting for a stronger confirmation. Let's see what the market is gonna give us from here so that we can enter from there. Okay, let's see what is going on. I need a stronger formation of the chart pattern. So now, as I can see from this area, I have head and shoulder. Which head and shoulder I'm talking about is this one. We have this shoulder, we have this head, and we have this shoulder. So we have also a neckline. Our neckline is from this area. I will take all this as a neckline because it has been rejected multiple times. What I will be looking at is the breakout of the of a neckline, because if we break out from this area, that means we are starting making a high to the higher low to go for the higher high. That's what I'm gonna be looking for. So this is our previous also area where someone maybe entered from there, but we didn't get a confirmation. This was a fake out. So I'm waiting for the market to break out like it happened here before, but also I'll be looking at the formation of the candlestick, the creation of support, so that I can confirm to go for bullish. Let's see if the market is gonna give what we are looking for. Okay, now let's see what happens if we can get that pullback with the confirmation of the candlestick patterns. Okay, let's see what the market is gonna do. Okay, this candlestick means that we are pulling back from this area. I will be looking for now a bullish candlestick to confirm that I can enter for buy. Let's see if we can get that confirmation so that we can enter from there. So another rejection, another bearish. Okay, we got a bullish engulfing candle. This is a what? This is a bullish engulfing candle. So I'm going to be taking a buy by expecting the market to what? To move in the uptrend direction or to reverse to the upside. Okay, so remember, I've been looking at what? Rejection from a strong zone. I got that. Secondly, I was looking for the what? The formation of the chart patterns. I have inverse head and shoulder. Okay, confirmation I have is that the candlestick, now we've been looking for the formation of the what? Of a trend by making a higher highs and higher lows. So now we got the confirmation from our previous low, where is the neckline. So now we have a support area or a higher low. So I'm gonna be entering from this candle, this bullish engulfing candle, by expecting the market to continue in the uptrend. Okay, now we are going to be entering from this area by expecting the market to change the direction to the what? To continue in the upside. Our stop loss will be below the previous low. So this is the strategy of holding a trade and trust the trend. Okay, now we are moving up. Okay, ejecting from there, and we came back in our previous strong areas, where someone who missed this area will be looking at to buy from. This is also a formation of the chart pattern from this area, an area to buy from. Let's see if we can break from this area. Now we are faking out, breaking up. We got to our target now. So that's how we trade a reversal. This was a bullish reversal. As long as we took a buy from our strong areas where we rejected before from, that was a signal to go for bullish. Let's take an example from bearish reversal. Okay, the bearish reversal also we are going to be looking on the first rule. Okay, we need to look at where the market rejected from multiple times or where the market reversed from multiple times. Okay, we have this area from the left hand side where the market moved from before. Okay, when we connect also with this area, this is a strong zone. As we are also approaching to this area, we have inside areas that we have to even to look at. So this is an area where we entered before when we were changing the direction to the downside. So now the market is approaching that area. Also, we are going to be looking at as the strong area. This is a supply zone. Okay, so let's see if the market can get to those areas so that we can be selling from there. I'm looking from rejection from this area and this area. Okay, so let's see what the market is gonna give us. Okay, we are moving up. Okay, we start rejecting from there, so which means this is a first sign, this bearish candle as a sign of reversal. Okay, let's see what the market is gonna do. Okay, we are still rejecting from this area. Let's see if we can now start creating some kind of chart patterns or if we can continue up and reject from this area. Okay, let's see. Okay, so now we created some kind of double top, but with the confirmation of the double top, we need a bearish also candle to confirm that is a double top. Okay, we got a bearish candle. So now we have this top and we have this top, which means this is a formation of what? Of the chart pattern. Okay, so we rejected from a strong area and we have the chart pattern, and also that chart pattern has the low. When we break this low or a neckline, which means it's going to be a lower low, so we are going to be looking for the higher high after that to go for the lower low. Let's see if the market is going to give us the confirmation or if the market is going to continue the upside. So you need to wait for that confirmation before deciding to enter. Okay, so we broke below the what? The previous low, which is a support, which is a neckline, which means we are making a lower low. Let's see what the market is going to give us here. So as we are making a lower low, we are waiting for a pullback. That pullback will be the creation of what? Of an entry to go for the lower low, will be a creation of a lower high to go for the lower low. So what am I gonna be looking for? I will be looking for this candle to continue and touch from our previous low, where I can get also a confirmation of a candlestick pattern where I can enter for sale. Okay, let's see. So now we have this candle, which is a bullish. We are waiting for a bearish candle. So we have a bearish engulfing, which is kind of formation of a shooting star, but this time this candle is bigger than this one. This is a bearish engulfing. So what am I gonna do here? Since I'm expecting the market to change the direction to the downside, okay, I will be entering from this area, and my stop loss will be above the previous highs from this area. So I will be targeting downside. I will be expecting the market to reach also the previous area where we change the direction from to go in the uptrend. Okay, now let's see what the market is gonna give us. Okay, now let's see, we are moving down, keep moving up, and so now we get to our target. So that's how we trade a bearish reversal. Remember all the rules, and remember, take these strategies by testing them. Do the back test every single day. As you repeat, you're gonna find yourself in the position as the market is the business like any other business. Where is the difference between a market and even other business? That's where we can make a big money that we didn't expect before if you follow the rules. Okay guys, thank you so much for your time. Subscribe on the channel, give the like on our video, and leave the comment below. Take care, until next time, be safe.